Welcome to today's video whereby we'll be sorry about it, whereby we'll be looking at fair value gaps. This is the second part two of fair value gaps. But then we're gonna include inverse fair value gaps because they go together, right? So again, what are fair value gaps? A gap between three candlesticks, right? So I I will leg it. Let's see. So we explained that fair value gaps. What happens is price usually come and retrace into them, right? And then move out, right? So they can be used as a continuation confluence. So now let's say, let me see first. Okay. Now for an inverse fair value gap, this is when we have, right, our first candlestick. Then we have the long one, which you guys like. So we have that. And then we have this also, right? So our fair value gap will be here. Oh, let me will be here, right? So let's say instead of price retracing into the fair value gap, we get this giant candlestick which inverses the fair value gap, right? Now, what happened here? We had a fair value gap, and then instead of retracing into it and continuing like retracing, then continuing upward, we inverted all the way down, right? And we closed with a full body below the fair value gap, right? So this is what we call an inverse fair value gap, which means now it is an early signal that showcases to us that we are about to change order flow, or we are about to change a trend, or we are about to move from bullish to bearish or bearish to bullish, right? In this case, this was bullish, and then once we invest this, we become bearish, right? So it can be used as an early signal if our breakout structure is further down here, right? This can be used as an early signal for us to know that there will be a change in order flow. Okay, so that's what an inverse fair value gap is. Now let's look for some uh, real life example. So an inverse fair value gap. Here's the first one. Let's see. Okay, let me go to M15 so I can see this first. Okay, let's use this one. This will be our first one. So we have a fair value gap up here, there, right? And then we have another fair value gap. Unfortunately, in this case, we have two down here, right? And what happened? Price came down. Does this mean with this candlestick here, does it mean that we invest all these fair value gaps? No, because we need a full candle closure down to the first fair value gap that was formed, right? So in this case, this one. Now, once we close with a full body below the fair value gap, if we were bullish, right, and then we come and close, we invest the fair value gap, but you expect a change in trend. So we were bullish, now we are about to hit the resistance. You can see price then started moving downwards, right? So let me remove this and look for another example. Let's see. I'm trying to find a good example which I know won't be confusing for you. Okay, so we have this one right down here. Right, so we were bearish because we broke structure down here. So we were bearish, lower low, lower high, lower low down there. Right. Now, what happened? We had a fair gap which we were supposed to retrace into. So price actually tried, but then we inversed, right? All the way up there. And then what happened after investing the fair value gap? Price started moving up. See? So that's what an inverse fair value gap is. Let me see if I can find a few more examples for you. It's not that complicated. Same thing applies to uh, fair value gap. So we had this one here, and then what happened? Price inverse this fair value gap up here. We closed with a full body above the fair value gap. And then what happened afterwards? Price started rallying and moving upwards. Let's see if we can find perhaps the last example. Then I'll explain something else about fair value gaps. I mean, inverse fair value gaps also. So let's see. Hmm, okay, this is not the best example, but then it works because it. Okay, now let me get this one. It will be. Okay, here's one. That one is going to be a bit confusing. There, see? So price went down, up, down, then we found the fair value gap down here. Then what happened? We invested with a full body closing outside of the fair value gap or above it. Then what did price do? Started going up. So that's what inverse fair value gaps are, right? They are not that confusing, they are easy to spot, they are everywhere also. So again, inverse fair value gaps and fair value gaps are not strategies, right? So make sure you keep this in mind. They are not trading strategies, they're just confluences that we use, right, before taking trades. And again, as I mentioned, inverse fair value gaps can be an early signal to us that we are about to change a trend, right? Then fair value gaps, we expect the market to come back to fill that gap, then move upward to continue with the current order flow, right? So that's what fair value gaps are and inverse fair value gaps are. Now, another thing that I wanted to talk about is when we have multiple fair value gaps and how it works for us to invest all of them, right? So let's see. Okay, let me see if I can. find some on the hourly time frame. So multiple fair value gaps which potentially get invest. Okay, we have this one here. So in this case, we have two fair value gaps. We have one here, right? And then we have another fair value gap there, right? So what happened? Price came up, right, into the first one, then it pushed all the way to close above the first fair value gap with a full body, not a wick, right? Now, this is what we consider an inverse fair value gaps in case we have multiple fair value gaps formed, right? So, and then what happened afterwards? If you can see here, then we have a fair value gap in this case here and there, and then what it tries to do, it retraced into the fair value gap, then continued moving upwards. See? So let's see if we can find more examples. So that was for, okay. So let's see if we can find one for when price is moving upwards. Yeah, on your side, loading quick, but on my screen here is loading very slow. It's very okay. We have in here. Okay, down. Down there as well. Okay, I believe the example that I'm gonna find now will be the last one because I'm not finding any good examples here to show you. So let's see. Let's write here. This was fair value caps, yes, but then we didn't go up because it was invest here, but because we broke structure down here to the upside. See, so hence I'm not trying to use that one. Okay, let's see here. Okay, let me go to M1. Today, we actually might have had something similar to what I'm trying to explain. So, let's see if we have multiple ones here. So we have one, we have two, okay. Good. So there we go. Here's another example for you. What happened? This was for today. There we had one there, and then we had the second one up here. All right. And then what happened? Price continue up, then this was during market open, by the way. So price invest all both fair value gaps, right? And then we had a full candlestick closure or a full body closing below the fair value gaps, right? And then what happened afterwards? price came down and continued moving down. See, so that was the inverse fair value gap of today, right? So when we have multiple fair value gaps, for it to be an inverse, we have to invert the first one. If we were moving upwards, the first one will be the bottom one, right? If we were moving downwards, the first one will be the one at the top. See? And then that's it for inverse fair value gaps. When we have stacked up, uh, yes, for inverse fair value gap, when we have stacked up fair value gaps, for it to be an inverse, we must inverse all of them, right? So again, I know I've said it before, but these are just confluences that we use, right? Let's say, uh, if you are watching my trade recaps, then you have heard me say before I take a trade, I go to M1 time frame and I wait for either a break of structure into the confluence or an inverse fair value gap into, because inverse fair value gaps shows a change in uh, the trend, right, or the market structure. And then I will be like, and then I wait for either a break of structure out or an inverse fair value gap out of the confluence, knowing that the continuation confluence has been built, right? So yes, this are what fair value gaps are and inverse fair value gaps. So I hope this video was worthwhile and you 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 got something to take home, right? So if you wanna make use of fair value gaps and inverse fair value gaps, the best way to do it so that you can spot them easily, right? You're gonna have to train your eye, meaning for in a day you'll probably have to find 10 fair value gaps whereby price retraced into them and then moved out. And then again, you have to find 10 inverse fair value gaps whereby price invest the fair value gap and it changed the market structure or market or the flow or the trend, right, to the downwards or to the upside, right? Because it's possible for, let me show you, it's possible for a fair value gap to be inversed and then the market doesn't continue in that direction, right? Hence, we say this is not a strategy and but a confluence that we use in order for us to take trades. You see, let's see in this case, okay, that one was inverse and we moved up. Okay, let me show you an example. So you see on this one, on this fair value gap here, this one here, we invested down here, but then we didn't continue the bearish movement, right? We moved upwards, you see. So there are fair value gaps and inverse fair value gaps, which are more strong compared to the others, right? So I will show you all of this once I break down my strategy from A to Z, and then you'll know which bevel gaps and inverse bevel gaps are important and which ones you should be using and which ones you should ignore. Right, so with that being said, I'll see you again onto the next video and thank you for watching. Cheers.